Hello and happy holidays. I'm Steve Balch, the Director of Wealth Management and Financial Planning at Certa Financial Planning, here to give you our monthly market update for December. Our macro stance stays status quo again this month. The market trend continues to be positive as we saw a strong rally in November, making it 6 of the last 7 months with a positive return for the S&P 500. Overall, 11 of the previous 13 months have been positive. The Fed policy continues to be positive as markets favor another 25 basis point cut at the December 18th meeting. There is a 66% chance of a cut and a 34% chance of no change in rates, according to the CME Fed Watch tool. What the Fed says about their expectations for 2025 will be the main focal point of the meeting. Fiscal policy continues to remain positive, but there may be an end in sight. We will see if the new administration and their DOGE department can help rein in spending going forward. Leading economic indicators remain neutral. The November jobs report surprised to the upside, but concerns about tariffs and sticky core inflation are raising concerns about headwinds in 2025. Valuations continue to be neutral as the U.S. market valuations continue to widen the gap between international valuations. Nevertheless, forward earnings expectations in the U.S. continue to move forward, helping support the U.S. market growth. The market regime stays in the reflationary quadrant. This still provides us with a risk-on environment. As a reminder, the regime occurs when inflation is rising while economic growth continues to be positive. The business cycle continues to be mixed. Recession risks continue to be pushed off, but headwinds with the new administration's tariffs or a Fed policy mistake could shift this outlook. 3 questions we are monitoring. What does a strong November tell us? Is December typically naughty or nice? Will Santa visit this December? November is up more than 5%, giving it the best monthly return since November 2023. However, do strong monthly gains impact the markets going forward? Historically, they do. After a 5% or better month, the S&P 500 is up an average of 13.5% a year later and higher 84% of the time. This bodes well for a potentially strong return again in 2025. As we prepare for the holidays, we need to check our list to see if December is typically naughty or nice, though. In general, December is usually nice, as it's rarely the worst month of the year. However, it is also not typically the best month, only taking that title 4 times since 1950. Therefore, we need to know, will Santa be visiting us this year? In fact, it appears so. When the S&P 500 has been up 20% or more heading into the final month, December has been positive 9 of the past 10 times. Additionally, stocks have closed green in an election year 9 of the past 10 times. So, what does this all mean? As for our outlook, 2024 has continued to be a resilient year in the stock markets, with the worst month being an almost 4% drop in April. This strong performance tends to bode well for a strong finish. In fact, when the S&P 500 has been up at least 10% at the midpoint of the election year, like it was this year, December has never been lower. Overall, our internal research suggests a high chance of a positive December finish. Markets are extended, so we remain cautious, but we continue to overweight our growth strategies as we ride the positive trend. We do monitor weekly and adjust as needed, but for now, the models remain status quo. We thank you for watching, and we wish you all a happy and safe holiday season. Please feel free to forward this to anyone you believe can benefit, and reach out if you have any questions.